Good evening, traders. Hopefully your week went very much well, like mine's did. Uh, we caught us a good little 8.5% week, and it was wonderful. So I got some trade setups. I mean, obviously it's November. Remember what happened last year around this time. If you were trading, things started to slow down, but we still trade until, you know, things slow down eventually, like around December. So let's look at Euro USD. All right, on the daily, what do we have here? We have supply area right here, right? It hit the supply, it tapped it strong. It created a lot of liquidity off that move. That's why we have this move down. So let's see how we can get into this. Let's come over here to the hour, and we can identify that it was this candle. This candle right here. We're going to fill in the whole thing. And we're going to put an arrow right here. And the arrow is going to say daily supply, right? Daily supply. So that is the daily supply. So we know the tap, that was the highest point, came down a little bit, tapped it again, just giving sell entries. All right. So we're on the hour. I'm looking at this area here as being a supply. Now, this is what we're going to do and what we should do for next week. So at the wick lows are liquidity, right? We should know that. By now, we are trading supply and demand. So these wick lows are stop losses from traders that were buying, right? So what the market likes to do, if this is going to go down, and we're trying to go down. First of all, let's identify the floor. Let's identify that this is the demand right here, right? We're going to get a reaction off that demand. Let's see how many pips that'll be. We'll start right here, okay? We'll start right here. That's a 168 pip move. And up here will be a 120 pip move. Make some really good money off this. Now we see that price failed to make highs at the 104,391 area because it hit that daily supply. So it came down and it's making lower lows. This was the previous low, which created a demand right here. Now, what we would like to do, first of all, let's see, there's a wick up here. And sometimes before a big reversal, so people that sold already are probably in the trade. Before a big reversal, let's keep in mind of a pattern, like we have an impulsive move up, and then it comes down, then starts failing to make lows and squeezes like that, then breaks structure, comes back again like it's doing right here. We can get a move like this, then down. This sometimes happens, especially on EU. When you're dealing with the dollar, man, like you got to understand stuff like this will happen. So what I'm anticipating, well, theoretically, what we would want is for the market to open up and this thing break and take these sellers out, right? And then consolidate and then come back up to this zone and then we fall down. That's what we're looking for. But this is EU. So what I'm looking for is not the actual break of structure, but maybe a push back up here to take out these sellers before coming all the way and smacking all the way down there. That's the move I'm looking for. So as far as entries will go, let's not, if it comes to here and smacks, then we can take this stop loss. See, our stop loss will be right here where these traders are at, because these traders are trying to take it down there. So we don't you can go for this one, but if you get stopped out, be patient And if it comes up to this one again, back up to this daily, give yourself some breathing room so it can come back down to this 10892 area. That is the move, the swing that we're looking for. And maybe this might happen. This might not happen for the rest of fourth quarter. This might happen going into January and February. I don't see this happening in fourth quarter. We're at the end of fourth quarter. I don't see this happening right now. So that's what I see for EU. Let's go over to UJ. Now, if you can see with UJ, if you're a Wyckoff trader, if you're a smart money trader, you see the liquidity grab. We have the demand right there, which is actually that whole thing will create the demand right there. We have some highs that are coming, and we have a little baby demand right there because I took a little trade off the M5 and caught that move. But what we're looking for with UJ is this. This is the last previous high. So we're going to put the wick right there. And what we want is we want a breaker structure. We want BOS. We want the breaker structure. So we want the impulsive move to come up. And then our Wyckoff traders understand that we're looking for a spring back down, either here or here. I think maybe this will be good enough. So when we had that breaker structure, a spring, and then we start coming up to these areas. So I'm looking, let me see. Because this whole, there's an imbalance right here. There's imbalance and with gaps that need to be filled. There's the gap right there. And then this is a whole gap right here. And then there's the actual imbalance from here to here. The only difference between gaps and imbalances, gaps will be everywhere in between wicks. So this can go down a little bit. And the imbalance will be the whole move. So this whole move is going to have to be filled up. So I'm guessing if we could get a breaker structure and then the Wyckoff spring back down into the demand, whether it be this demand or this demand down here, it's the same situation with Euro USD. Because UJ and Euro USD are pretty much the they're the complete opposite. So we could have, I want to put maybe down to that wick. Shouldn't go down there. If it comes right here, it should not come down there. So obviously 1-to-1 or TP1 will be right there to that high. Then TP2 could be somewhere in the middle. TP3 is the whole move back up. And we're talking, how many pips? This is UJ. This is 663 pip move back up. Now remember, the dollar's interest rates, and then with the inflation still being in effect, the dollar has better interest rates against the yen. So this should come back up. Like if you're going with interest rate, which is what currency trading is, if you understand that JPY, the yen's interest rate is at negative 0.33, and ours is at like 8. I forgot what ours at, 8.5 or something. A lot of stuff goes into currencies going in the direction that they're going in because of interest rates with the banks and because of the news and things like that. So this would make sense to go with the interest rates of this move. So that's what we're waiting on with that. Now, those are the two swing trades. Obviously, I don't have to go over New Zealand dollar or GBP dollar because they're going to do what Euro USD is doing. Now, the next thing I want to talk about before the video is over is your trading plan. How's you guys' trading plan going? Do you even have one? Are you a profitable trader? If not, this is what I do. I'll give you an example of what I do. Okay? I trade odd USD, GBP USD, Euro USD, New Zealand, obviously. Duh, I trade Usdjpy, SP 500, and NAS 100. All right. These are the only pairs that I trade. Why? Because it's very predictable. After looking at the dollars for so long, it's so predictable to see what the dollar's going to do, especially if you understand how the DXY moves. The reason why you should choose a few pairs to trade, because after a while you'll start noticing the patterns with those pairs and you'll be able to trade it. And then the dollar allows the AU, GU, all these are dollar pairs. So it moves very volatile, especially USD JPY is very volatile because it's against the yen. AU is a slower one, but it respects support and resistance and supply and demand. All AU is my baby. It used to be New Zealand dollar. AU has literally taken over New Zealand dollar. AU respects most setups. GU is highly volatile and it pays real good. So obviously, I'm gonna trade GU. Euro dollar is the complete opposite of the DXY. So obviously, I'm gonna trade Euro dollar. It's the DXY. I'm always looking at the DXY, which is the dollar index. New Zealand, that's just always been my favorite pair since I started trading. And New Zealand is pretty stern and it likes to go in one direction. USD JPY is just volatile and moves in one direction violently because it's against the yen. SP 500 is a slower indice, but it's just like odd USD. It respects the trend very well. NAS is a little bit more faster than SP 500 and is very volatile. It's the tech companies. So I trade that very well and it respects Wyckoff and supply and demand very well. So that's why I love NAS 100. These are the only pairs I look at. I trade supply and demand. I literally trade them off the M5. And let's put this in here. And this is everything that I'm telling you is going to make you better. All right. So I trade from 6 a.m. to 10 o'clock a.m. Right. That gives me 4 hours to find an M5 setup or M15 supply and demand setup on these pairs. And I'm only looking for the high probability version of my trades, right? Not if I see some sloppy, everybody got their trade set up. So let's just say this is one of my trade setups. So it's making the high, come up, make a high, come back down here, and then it comes back up here. Let's just say this is just a scenario. Let's say this was the demand and it was a high probability demand. I'll take it for a long position right here at the break of the candle, stops below the zone, and I'll take it back up to the high. And it'd be like a 20 pip move on the M5. That's 1% for me, right? Something like that. That's what I'm looking for on the M5. And obviously it'll be in cahoots with the higher time frames and stuff too. If I don't see my high probability setup, when I say high probability, that means all the confirmations are in set for that trade. If I don't see that setup, I don't trade for the day. Okay, that's what it is. Let's just say I'm 2 or 3 confirmations off. No, that's low probability. I don't want it. This is, what I'm saying? It's about high probability. So I take the high probability setup. It's usually 2 to 1. So let it hit stop loss, let it hit TP, and I do good. I like to win frequently. That's why I do M5 setups every day. I like to win frequently, and I like to get my money. 2 trades a day. If I lose the trade, I'm done for the day. Start over tomorrow. And I've been successful this way. The less you trade, And the more picky you be about your setup, the more better it's for you to be profitable anyways. So this is what from 6 to 10, that's New York. After 10 o'clock, the banks start playing games and reversing and doing stupid stuff anyway. So from 6 a.m. to 10 a.m., that's pre-London and then into New York. I can find my setup every day on here. If I don't, then we good. No position is a position. You know what I'm saying? And that's just what it is. And I've been very much so successful with that. That's pretty much my trading plan. On a good week like last week, the week that just passed, 8.5%. Great week for me. On a bad week, even with my trading plan, because I'm doing one or twos, I still be like 1 or 2% up. I think in the last 4 months, I left the market one time, 1 or 2 times that were like -2%. No problem. But I make sure, let me write all that down so you can have it. So 2 trades a day, 2 trades a day. All right. If I win the first trade, I'm done. All right. If I win the first trade, I'm done. I'm walking away. If I don't find no trade for at them time frames, I'm walking away. If I lose a trade, I might trade again if it's a good setup. But honestly, if I lose, I'm done too. And it's like stop trading, stop trading after my time. No trading during Asian session is slow, and I ain't up for London. So who's finna trade when I'm not up? This is exactly what I do. It looks really weird, but if you get something like this, like maybe you trade in the morning and you do dollar pairs and just took 2 trades, find a trading setup or find a trading strategy that works on multiple time frames, which majority of them do. If you're a pattern trader, obviously if you're looking at the hour and you know it's finna make an M on the hour, you can come down to the M15 or the M5 and find a setup. Now I'm gonna give you an example. Today, let's go over to which one was it? GU or U? It was New Zealand dollar. So this is the last example. All right, you see this demand right here? So well, let's do one better. Here go one. One. So on the hour, see this wick? There's a supply right there. There. And then let's say we go to replay. And this is what you see. This is what I see on the hour. It's coming up to a supply after the break of structure. Here's the wick. It broke structure. So BOS. So when it breaks structure, I'm looking for it to come back up to the zone and then drop, right? Something like that. That's what I usually look for. But I'm not looking for it on the hour. And I got my set stop loss. Like I'm looking for a specific amount. This is all back tested, right? So why it comes up here? Oh, I can't do it. Oh, they wouldn't let me. Okay, I guess I can't go to replay mode, or I can probably if I come down to the M5. So that's the move right there. That's that hour move right there. So let's replay it so I can show you how we get in. So as soon as it tapped it, I'm not getting the in right away. This is how I get in. I actually took this trade today. Also, let's see. So there's the rejection candle. And then this candle closed. As soon as this is the breaker candle right here. The rejection candle gets broken, I'm in. So my entry is right there on the M5. And sometimes I don't even, sometimes I put it above the wick like this. And this is how you be getting them trades where I didn't do this today. I mean, I actually had it a little bit above this wick over here, just in case it wanted to come back up there. But I knew this was the H1. So here, this the H1, and you come over to the M5, this to break a candle, you can possibly put it back up to that high and get a very good risk to reward ratio. What's that? That would have been 38 pips. But what I do is I'm only looking for 20 pip move. 20 pip move, and my stop loss is usually like 10 pips. But this one I had to make 15. So this was a 1-to-1, somewhere around a 1-to-1. I keep it at a 1-to-1, and then sometimes I let the runner run. So this would have been a 1-to-1, but honestly, I went down there. So it all depends on how the market looks. It's this some trades are not in confluence with the higher time frame. This was, so I was able to get away with coming back down to the lows. After it's the breaker structure, and then down here is liquidity. I already know it's liquidity right here after this move. Oh, and we came up a little bit, made that M, and people that trade patterns would have got the M. Simple as that. Oh, I had to, no, it's right there. And it took out all of them. It's going to take out all them traders that put the buy in. Easy M5 setup. And I could have kept it going. And it's good to, like, when this was going on, this is during New York session, so you know the banks, because supply and demand is what the banks use to trade off of during. So if you know it was going to make a good move, what's that? That's a 2.61, but I had it, but yeah, I had it above that wick. But if I would have put it at the top of that wick like that, that would have been almost a 4R trade, almost. And remember, this was a H1. It tapped the H1 and dropped like that. So I could have had it to them lows. And I think that's where it went. It went down them lows, didn't it? Yep, I took them traders out. And look right there. I'll show you something. See how after moves like that, you see how it created that supply right there, and then this one tapped it and went back down? You could take those too, because that would have been a fresh supply. So let's go to M5. So on the M5, it dropped. If you know there was a fresh supply that it just made, you saw it on the H1. It tapped it again, and you could have got another quick 20, 30 pip move off that. Then eventually it'll break it. See right here, it tried to tap and come down again, but it was time to break it. But see, those are called uncontested areas. It's uncontested. So it just tapped it again and came back down because there was still liquidity sitting in there. So it tapped it, got another trade out of it. But yeah, that's basically how I trade, and it's just I'm successful with it. Excuse me. I'm successful with it, and it works out for me, and I want this to work out for you guys. If you guys trade supply and demand or whatever style of trading you trade, have a plan. Learn how to trade it on a lower time frame, and make sure that you win. Make sure your win rate is around 75, 80%. Now, some people don't care about their win rate, but the reason why I want your win rate to be high so you can win frequently. Why wouldn't you want your win rate up? You know what I'm saying? Why wouldn't you want your win rate up? Good win rate, and you could be winning frequently, and then you can go flip accounts. Low key, you can go flip accounts. But anyway, just that's all I got. I know this video's been long, but I want to make sure that you guys understand that trading can be so easy if you just get out of your way. Tell your central nervous system to get out of the way. Program your central nervous system to make this work for you. Because learning the strategy is the easy part. Implementing it in live on a live account is the hard part because your brain wants to make it hard. It doesn't have to be hard. And I mean, I've been trading for 3 years now, and it's easy. It's getting easy for me. So imagine me 13 years from now. Oh my goodness. Oh my goodness. But that's what I want you guys to do. That longevity. To keep going. Keep chipping away at yourself like a solid Dana gold and sharpening up your skills. So when your account gets 6, 7, 8 figures, can't nobody tell you nothing. This is like be breathing or like drinking water. That's how you want to make this. But that being said, I will see you on the next video. Peace.